What's up, Tim Sykes, Millionaire Mentor, here with Tim Bowen, stocks to trade, lead trainer, part-time trader, hair grower to the stars. Today, we're talking about technical analysis versus fundamental analysis. Which do you like better?
I think you and I are very similar in this regard. I consider
Lower your volume, first of all. You got to tone it down.
I'm trying to keep up with you.
I talk fast. I don't talk loud. There's a difference.
I'm pretty sure you talk loud.
Loud versus fast, technical versus fundamental. You see, this is how we're doing things.
Okay, I'll match your volume. So anyway, I think both of us are similar in that we consider ourselves techno fundamentals. You know, we take both of them into consideration. Now,
I think I consider myself a fundo technical.
Oh, really? Do you?
I've never heard this word before. This is ridiculous.
You take into consideration the technicals and the fundamentals.
No, I know. I've never heard this term before. Fundo,
That's not what I said.
Yeah, you said techno fundamental. Like, what is this? A new techno? This is some new kind of music? Listen. Use both, okay?
Explain the terms. You got to start there. What are technicals? What are fundamentals?
Use both. Use everything.
But what are they?
Terms don't even matter, okay? You use every indicator in my trader checklist guide that covers both fundamental and technical. Technical, you're analyzing the chart, analyzing price action, key resistance levels, key support levels, stuff like that. Fundamental, you're analyzing the company, profits, revenues, market cap, industry, sector-wide. So some people only look at technicals. They say, screw the fundamentals. It's all about the chart. Some people say, screw the chart. It's all about what the company is worth. We like a mix. I don't know how to ignore indicators. I don't know how to say, oh, this chart is great, but it's in a crappy industry.
Right.
I don't know how to say, like, the fundamentals are great, but the chart is terrible. Like, you consider everything, and the more indicators you use, the better. Some of you guys like to buy stocks just because it has news. Like, oh, this stock has good news, let me buy. And you ignore the chart. You ignore that the stock has, terrible long-term resistance and has a terrible job at spiking. Some people say, oh, look at the news is so great, the price action is amazing. Then you ignore the terrible fundamentals where the company has warrants at different levels where if the stock hits those levels, there's going to be automated selling.
Or one of my favorites, so many newer traders get enamored with short selling and they short these stocks because the fundamentals are so bad when they don't realize that when it's day one of the run, it's the beginning of the run, it doesn't matter how bad the fundamentals are, and they ultimately get squeezed and lose a bunch of money.
You have to remember, most of these penny stocks, if not all of them, have terrible fundamentals.
They're $1 for a reason.
One or two products, very little way in the way of revenue, profits, losses. Like it's all negligible. It's all just fairy dust, right? It's like you're just betting on hype and hope for, this product in the future. What is this product capable of doing 2 years, 10 years from now? Some people say, oh, I can never invest or buy, even trade a company with bad fundamentals. If you look at Instagram, there are a few examples. This was never a stock, but Instagram was a company. They got acquired by Facebook for $1 billion when they had only a few employees, no revenue, no business model.
Uber, so many of these companies,
But Instagram had no fundamentals.
Sure.
And yet they got bought out for $1 billion. Everyone ripped on Facebook being like, what, you're paying $1 billion for nothing. Now Instagram has grown. They've instituted business models later on in their maturity as a company. And now Instagram is valued at 50 to 100 billion. So Facebook got a great deal buying it with no fundamentals. So it's not always about fundamentals. And then also price action, you have to consider that, okay? Like if a stock has never spiked before in the past, I don't care how good the fundamentals are. If a stock has a good history of spiking again and again, I don't care how bad the fundamentals are. You have these stocks that continue to spike because traders remember them. Buyers like them because they're like, oh, I made money last time, let me buy it again. Short sellers are scared to short because they might have lost money last time it spiked so quickly. So look at the past charts, look at the fundamentals, but also consider everything as a whole. That's what trading is all about.
Yep. So, it's all, I call it, kind of building the case or components of the recipe. Look at the chart, look at the fundamentals, look at your VWAP, look at your moving averages, whatever your technical indicators are that you overlay on that chart. But just remember, no one indicator, no one fundamental. Doesn't matter if this company is located in, in a mailboxes, etc. If it's day one of that move, it can still spike. So all of these things come together to kind of build that trade idea, but no one indicator or technical or fundamental aspect will make the trade. You have to take everything into consideration, then make your trade.
And let me talk about one other thing, analysis paralysis, where we say that technical analysis matters and fundamental analysis. So, you might be analyzing everything and the stock moves without you. This is not an exact science.
Yep.
Okay, so you can have 20 technical indicators and 50 fundamental indicators, and you're looking at 70 indicators, and you're like, I don't know what to do. My trader checklist guide breaks it into 7 indicators. I think that's a good amount. Obviously, you still have to analyze things.
I've got. We use a worksheet in Stocks and Trade Pro. I think we've got 7 or 8 criteria, so very similar.
So don't feel like you have to analyze everything. You're trying to get like a best guess. You're trying to get the gist of the move. If you are going to be right with these stocks, it doesn't matter if the company is worth $3.76 per share on paper, like that's the fundamental value, or if the stock has spiked, 17 times in the past. You're trying to take the meat of the move. You're trying to understand, will this thing move up or down based on your predictions, based on your analysis? And it gets easier over time. I know some of you guys watching this are like, oh, this is so much work. Trust me, you internalize everything after a few years. In the beginning, it's the hardest.
You will take, in the beginning, you might take 10 minutes, and then a few months down the road, you take 5 minutes, and then, where Tim and I are at, I mean, we can look at something, we can go through the fundamentals very quickly. Most tickers, it's, a minute, 30 seconds type thing. Just, you just work on that process. It's the OODA loop, working through that decision process. The quicker you can get at it, the better you are going to be.
Leave comments below. Let us know what you think about this video, and if you have any other suggestions for other videos. Cheers. Hey, Tim Sykes, Millionaire Mentor and Trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there, and also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.